Finally, we're looking at Lyft today, soaring as third quarter sales top estimates. Active riders up 9% from a year ago. The rideshare company also issuing strong guidance for the current quarter and full year as it attracts more commuters. Joining us now, we want to bring in Bernie McTernan. He's Needham and Company's managing director. Now, Bernie, this is a very different story than what we heard from Uber just last week. What does this show just in terms of how much ground, or is Lyft maybe gaining significant ground against Uber?
Yeah, well, no, it was a great quarter. We're looking for about 15% bookings growth in the second half of the year now. I mean, for Uber on a relative basis, they grew 27% in the second quarter, expected to be low 20% range in the fourth quarter. So, and that's on mobility. So Uber's still growing faster, but Lyft is making great inroads. You mentioned on the commuter. So commute rides is about half of the rides during the week. And they launched this price lock guarantee, Lyft did, that actually increased frequency 4 times what they normally get from those commuting hours. So Lyft, the problem for Lyft is that everyone knows what Lyft is, but they need them to actually get further down the funnel and actually engage with them. So we like that Lyft is really focusing on specific products, specific use cases, partnership with companies to try to really drive that conversion. And seems to be working so far.
It does seem to be working. I guess how much more growth opportunity do you see there with that new Fair Lock offering?
Yeah, we'll see. It's still really early days, and again, it's a big part of the the amount of rides that Lyft has, and it really speaks to this new management team. They've come in and done a really terrific job. Really, they've only missed 1 quarter out of the gates. That's a stark contrast to what we saw from the prior company. And then that's what gets you to think about their long-term targets. And we're still a substantial discount in terms of that 15% CAGR that they guided to in terms of getting to $1 billion of EBITDA. And so as you keep, marching along these goals that they have on the short-term basis, it makes that longer-term goal seemingly more achievable. And Lyft is already looking, pretty cheap on a relative basis, relative to Uber, relative to DoorDash, on 25 EBITDA, and then obviously just a lot cheaper if you look out to 27 and beyond.
Bernie, how big of a catalyst do you see this new partnership with Intel's Mobileye and May Mobility here as it does gear up for those robo-taxi services?
Yeah, so Lyft reported 3 AV partnerships this week. We think AVs in the rideshare world is going to be an asset-light approach. So then, therefore, partnerships is key. As partnering with a diverse set of companies, this is the same strategy that we're seeing Uber do, albeit Uber's with Waymo, which is best in breed in terms of who you want to partner with. But that's what we want to see. From Uber, from Lyft, is to continue to partner with companies, continue to roll out this technology in more regions, more cities. And again, we think ultimately this should be a TAM enhancer. This should reduce the price of rides over time. And again, it's partnerships that are going to get them there from a technology perspective. But it does bring up Lyft. With the last guest, you've spoken about what this Trump administration could mean. I think M&A is something we have to be on the lookout for. In Lyft, you had Uber. Partnerships are becoming more of the game in terms of these consumer-facing marketplaces. So you have Uber partnering with Instacart. You had Dash and Lyft announced last week. I wonder if this Trump administration again could be the catalyst to finally get some real M&A in the consumer marketplaces.
Do you see Lyft acquiring a smaller company, or do you see Lyft being an acquisition target?
I think they could be an acquisition target, either from a marketplace or from a technology provider as well, to realizing the value of their the value of a marketplace as you're rolling out technology. I mean, we'll have to see how everything shakes out, but I think you have to put a higher likelihood on that today than you did 2 days ago.
Any potential buyers? I guess more specifically, who then would be interested? As you talk
also,
about
Dash always comes up. Tony's been pretty transparent that he doesn't want to buy Lyft, but we'll have to see. We certainly didn't see that partnership coming. But then again, going back to, is there a technology provider that wants a ride-sharing marketplace to stand up their technology?
Bertie, I also want to talk to you about the Massachusetts voters approving giving union rights to drivers here, not only for Lyft, but also Uber when you talk about these ride-hailing services. I'm curious just in terms of the implications here for Lyft, just if we do see more states go this route, how big of a cost disadvantage would this be for Lyft?
Yeah, certainly one of the things that Lyft has been doing really over the past 6-12 months is increased driver pay transparency, making sure that they're giving the driver 70% of the bookings net of some of the expenses of the platform. So they've been trying to move in terms of the right way. And one of the things they actually mentioned on this earnings call is because of some of these transparency measures, both on pricing and because of the actual drives that they're showing the driver in terms of, whether it's the actual take-home pay the driver is going to be getting, or from an EV perspective, how far the trip is from like a range anxiety perspective, so the driver can feel comfortable, showing the driver more transparency there, and that's actually leading to more driver preference towards Lyft. So, certainly something we'll have to continue to watch in terms of how these states shake out on an individual basis, but something the company has been very much focused on.